Good morning, everybody. It's Aaron. Today is Friday, March 14th, 2025. I, of course, am here as a daily mortgage rate update, the only place on the web where you get to join me live each and every weekday morning, 9:30 a.m. Eastern Time. Broadcasting to you on Facebook and on YouTube. If you're here live, say good morning. If you're watching on the replay, don't forget, give me a hashtag replay in the comments. Let me know that you were here. Whether you're here live or on the replay, don't forget on Facebook to smash that like button, tag a fellow friend, share this post in a group. If you're on YouTube, go ahead and subscribe. Click that thumbs up button as well. If you'd like a reminder that I am going live, you can sign up for a text reminder at hmmr.io/reminder, or if you're on your phone now, you can go ahead, take a screenshot and go to your photos, and the QR code will still work, which isn't that cool? So you can go ahead and click that. That'll take you over there, and you can get a quick reminder in the morning that I am going live, so you don't miss any of the fun action. If you're here this morning, say good morning. Let's say hi to the live folks. Debbie Richardson, good morning. Mike Brown, great to see you, sir. Mallory Fotiadis, always wonderful to have you here. Angela Walters, good morning. Jonathan McDaniel, great to see you. Who else is here this morning? Say hello. Dan Crowley, hello, my friend. James Mahan, TGIF, baby, I agree. In fact, I am in the hotel, as y'all can see, after watching the Blake Shelton concert last night, and I got some work to do this morning, and then it will be a nice long weekend with my wife. We're going to enjoy the town of Greenville. So, Mike Morano, good morning, sir. Jason Hanson, great to have you here. If you're here this morning, say good morning. Like Mark Clark, school's out today, off to the Georgia Aquarium. Nice, and happy birthday to your son. Honey, have we been to the Georgia Aquarium? The one in Atlanta, right? Yeah, is that the one in Atlanta? We've been there before. Best one, my wife says. I forget them. They all blend together, but I forget exactly. I like the one in Tampa. That was the one I remember most, but I don't know if that was. But Harry Dennis, good morning, sir. Great to have you here as well. All right, y'all. I'm going to jump in. Let's get to the good stuff. Let's go ahead and get started to talk about what's going on with rates and pricing this morning. We're going to chat about what's going on next week. We got the Fed meeting. We'll see if there's anything else that matters between now and then, which way rates are headed and why. So we'll give it all a quick preview. Let's go ahead. I'm going to share my screen and turn this back to here. All right. And let's jump on over. So we'll do a refresh so we get the most updated information here. Mortgage-backed securities down about 3 basis points to start the morning, a whopping 3 basis points, coming back from some weakness. However, that could change. Right now, it's 9:34 a.m. Eastern time, and we could see that change depending on how the consumer sentiment data comes out around 10 a.m. So you could see here there was a big drop in overnight trading. Mortgage-backed securities improved the day yesterday a little bit. Started when pricing came out around 101.30 and then ended the day around 101.37. Not enough that you would see reprices better. 7 basis points not going to move the needle, but it is nice to see that little bit of a reversal. However, we gave those gains back this morning, but we've seen bonds steadily climbing back since then. If you take a look here at the 10-year Treasury yield, we're at 4.30. That's below the 4.34 we were at yesterday around this time, but still higher than the 4.27 that it ended the day at. But you can see the overall trend. We're still moving up over here with mortgage-backed securities, kind of moving down. When we take a look at what that means for rate sheets, you're seeing rates very much in that same zone that we've been, right around 6.75 and staying there. Yesterday they were a little bit higher, to start the day, and ended the day a little bit better, but around 6.75 is where we're kind of seeing everything gravitate. Take a look at Optimal Blue here and see what it says. LOs are locking conforming loans at, so just slightly better. Wednesday was 6.66. Yesterday, 6.64. I mean, it's really no difference, right? And then today will be a little bit better, but not much of anything. And you should see very similar behavior when it comes to FHA. Going to price around that same. One of the news this morning, some of the happy stuff here in, say, Bloomberg, a couple of articles in particular that caught my attention that I wanted to share with you all this morning. First things first is this is a blurb from the market wrap-up, and it talks about credit risk on rise. Now, this is not consumer credit. This is business credit. Credit markets are beginning to confirm the growth angst that's fueled more than a $5 trillion equity wipeout since late February. And if we take a look at what that actually is, it's here. Stock turmoil spreads as fear hits the world of corporate bonds. Now, the reason I bring this up because mortgage-backed securities are a bond, and depending on how corporate bonds are selling, it's going to influence not a huge thing, but it is going to influence how mortgage-backed securities are doing. As stocks tumbled in recent weeks, a cohort of Wall Street pros took solace as credit markets held firm and economic data proved benign. On Thursday, neither offered much relief after President Donald Trump escalated his trade war across the Atlantic. I love how they look for these inflammatory, the trade war. Corporate bond investors, historically dubbed the smart money for presaging economic shifts, took cover. The cost to protect high-grade debt against default hit the highest intraday level since the wrenching if short-lived sell-off in August of last year. What this is really saying, what we're looking at here is if there's concerns about the performance on corporate bonds, that is weakness that you'll also see more money go into something like mortgage-backed securities, which would be a better investment if corporate bonds, which have better yields, are considered to be risky and not performing as well. They're going to take a hit, and you'll see that benefit mortgage-backed securities if that were to happen on a full regular basis. Other stuff here. This was an article this morning about Fed expected to cut rates twice this year starting in September. Bloomberg did a say between March 12th and between March 7th and March 12th, and it says that it sees respondents saying that we're going to see two cuts. Forecasters see two cuts, one in September and one in December, according to the median projection. However, if we use the CME Fed, we can see that markets don't care what those economists have to say. Markets are still firmly pricing in there it goes. Okay. Let me know if you guys can hear me still. So I don't know. We gotta love it when the internet goes weird on you. But in the meantime, when we bounce back over to this screen, what I was actually going to say to you was, I don't know. But now I got distracted by Mike Brown. What's my opinion on that Brian Decker Instagram post? No idea, Mike, because I don't know what Instagram post you're talking about. My kids laugh at me because I don't go on Instagram nearly enough. What?
You're live. You can hear
I can hear what?
the thing. You can hear it.
I can hear what thing? The post?
No, you.
Oh.
You're hearing
Oh, you're looking at me. Oh, that's funny. Thank you, honey. There's a delay though. It's about 30 seconds. So my wife is telling me she's watching me on the phone. You could see me live. You're watching me live twice, as if one husband's not enough for
No,
you.
one is enough. Believe me. You said you weren't sure if they could see.
Thank you. Thank you. So, all right. Hey, careful. Otherwise, it won't go on YouTube if you drop in the words. Yeah, they can. It'll pick it up. So anyway, everybody, the overall picture. That's what I was going to talk about. The overall picture is, as long as there's consideration for economic weakness, markets getting more pessimistic, we don't have to worry about rates moving up too much for now. But the near term, I've been in a lock stance. Let me see. I'll pop it on the screen. Here you go. I've been saying the last couple of days to lock anything, it's risk averse, and to lock anything closing the next couple of weeks. Next week, we got the Fed meeting, right? And the Fed meeting, we're going to get a new dot plot. We're going to see what the Fed members are forecasting for how many Fed cuts we'll get. But the big news, the big reaction is going to be to Fed Chair Jerome Powell's press conference. Now, last week, Powell's last comments were that the economy was not showing enough signs that it would support a large Fed rate cut or any reaction soon. Market's not expecting any kind of Fed rate cut at this meeting. So, is Powell going to give us anything that signals weakness that markets will react to? We'll have to see. It just, I highly doubt it though. So anything closing the next 15 to 30 days, you have to decide if you want to get into that next labor market data in April, at the beginning of April, and if that's going to be enough to see things improve. But overall, that trend, we've noticed the trend, rates just pricing creeping a little bit worse. We could see some volatility next week. We're definitely going to see volatility on Wednesday around the Fed meeting. Will it be enough to see rates improve to justify floating? For me, anything closing in the next 15 days, I'm just locking it. I'm not going into the Fed meeting. Between now and then, you might see things worsen, and that's why. The Fed meeting itself, I like to float into because it happens during the middle of the day. But what could happen Monday? What could happen Tuesday? We could continue to lose pricing before we even get into the Fed meeting. And then if the Fed meeting doesn't pay off, then we've basically seen things continue to creep worse. And that's kind of the outlook that I think things are going to have. Again, just forecasting. There's no guarantee to any of that. So we'll have to see where that goes. But what do you guys think in the comments? Mike, I will go back and check out that Instagram post, see about chatting about it next week. So, all right, everybody. Well, you guys have a fantastic weekend. Let me know in the comments, what are you guys doing this weekend? Like I said, we watched the Blake Shelton concert last night. I thought it was a great concert, and so did my wife. And this weekend, we're going to hang out in Greenville and go to the Van Gogh. Is that what it is? The Van Gogh?
Yeah, Van Gogh Monet exhibit.
The Van Gogh Monet exhibit. So we're going to do
culture.
Yeah. If I want culture, I eat yogurt. There you go. But I'm going to get some culture. So Lisa says hello, Lisa Herricks. Hello, Lisa. So, all right, everybody, I'm out of here. You guys have a great weekend, and I'll see you on Monday. Bye-bye.